It's all yours, Carmen.
Cool. All right, everybody. So there's like 9 people on here. So guess what? Y'all about to get this, and everybody else is gonna have to wait for it. So first things first, today was Fed Day. We had a huge Fed meeting today, and then Janet Yellen decided to speak also. Had the markets all over the place today. So the big takeaway from today, I am not going to read through all of what came out today. I'm just going to sum it up for you. You can go through, it's like, I'd say it's about 19 to 20 pages worth of stuff. So this is the summary of the economic projections. You'll hear people talk about this. You'll hear them talk about where the Fed expects numbers and stuff to be. This is a chart of those numbers. Essentially, they're saying that on the high end, inflation is going to be about 3% or so going into next year. Right now, if you really crunch the numbers, it's about 4. But next year, they're hoping to taper that, get it to about 3%, and then have it steadily drop over time. So the other big thing that came out of today was that the Fed is wanting to eventually increase rates. So we already talked about this on the call. That shouldn't have been a huge surprise based on what I was telling you guys whenever we first started talking about inflation, started talking about economic growth, and when the Fed first predicted keeping rates low. We talked about what was going to have to happen when the economy needed to switch gears and change again. This is like one of the first steps. You start with taxes, you start with the interest rates, and you go from there. You start cutting out stimulus and all of these programs that are designed to actually help the economy grow. So the announcement that the Fed was going to do at least 2 rate increases by 2023 came as a slight shock to the market, but his tone overall was just very not optimistic. In like a financial term, they call it dovish. So his tone was still very wait and see, but this is what we anticipate on having to do. But then also still extending the dates for things like overnight banking that they have to do, bank spending overnight rates, that type of thing. They're still extending that out. They're still planning to do stimulus type things for the economy in the background. So as you looked at the markets today, the markets just really were not feeling what he had to say at all. The rate news was a bit of a surprise. So if you hadn't gone out and gotten a mortgage before today, or hadn't gone out and gotten a loan before today, well, those rates are up. They were up just off of that news alone, despite like 1 to 1.5%, depending on what actual term rate you were looking at. So the markets are ready. You can tell the banks are ready for these rate increases because they tend to profit more when the rates go up, because they're not going to change your rates that they've dropped over time. So they're happy about this. Here, I wanted to show you also just some more data for what they're planning on doing. They want to see consumer prices over time plateau. Like with inflation, you know prices are going to go up, but go up, plateau, and then drop. Unemployment rate, they want to see the unemployment rate drop. The anticipated rate is better shown in this chart up top. A lot of these charts down here, if you're like super into math and you like reading dot plots and box and whisker plots, all that kind of stuff, that's for you down there. But I thought there was going to be another summary paragraph, but there wasn't. It was just more graphs. So here, this is just more or less shows you what they anticipate over the next coming year. So the unemployment rate, the average unemployment rate, they want to be around 3.5% in 2023 when they're anticipating doing these rate changes. And then they also show you a range of what they're predicting it could be. So anywhere from 3.0 to 3.9, which is essentially 4 in a way. So that puts you right there at that 3.5 range that they want to see unemployment at. Inflation, they're showing you what they anticipate inflation to be. So they're anticipating us hitting that 2% target on average by next year, and then holding steady with that rate in 2023. So essentially their plan right now is to try to get us on track. They feel like, okay, if we can overshoot the target, then we can rein it back in. But the Fed never really tends to do that as they predict that they will. So go through, you can read this, have fun with it, pick all the data out, start correlating GDP numbers and PCE numbers with stuff that's on the Forex factory chart. They pull numbers that we look at every week on Forex factory. They literally pull that data and put it in here like it's in the whole first paragraph. It's like maybe 5 to 10 economic numbers in there that we look at. So the Forex factory calendar tells you all of that stuff. So that's that. Also, the Fed statement that came out today should look super familiar. It literally is like they copy and pasted from the last time they did this. It's almost the exact same thing. Literally, it's almost the exact same thing. Maybe like a few sentences here and there are different, but it's pretty much the exact same thing. So I'm not even going to read it. If you read it the last time, or you remember me talking about it the last time, it hasn't really changed that much. And then if you actually want to go through the Fed site to actually see the video from the speech today, it should be on here. Yeah, it's right there. Actually, all of the first two links. So the very first one is when he actually did the statement, and the second one is question and answer. So that's when they got a chance to ask the questions. If you aren't familiar with the Fed giving a speech and then having to do question and answer, and you don't want to watch it, they did put a transcript up for this one. So it goes through and literally it's in written form, everything that he said in that video. So you can go through, read that. It's 5 pages, but it's well worth it. It's worth it because I show you guys this stuff because when you're watching the news, when you're trying to gain understanding of the marketplace, where your money's going, why that value of your house might drop or go up, why your bank accounts look a certain way, or your credit card statements or whatever, like all that information they tell you. And reading those 5 pages, even though you might not understand every word of it, in a general sense, you'll get it. And it'll just start to help you understand what's going on with your money and our financial system and where it's going. These question and answer sessions is when the market really moves because for the most part, they get some of the questions ahead of time, but Jerome Powell doesn't get all the questions. And so when he's asked certain questions, the market moves because he might stumble over an answer. He might have a difficult time answering a question. He might not be very thorough. So if he tends to be very ambiguous, broad, and not wanting to specifically answer a question, the market tends to see that as Fed uncertainty, and the markets don't really like that. They want the Fed to be sure about what's going on because there again, they are the ones that control our money, the flow of it, how it works through the system, along with the Treasury. But for the most part, the Fed, speaking of the Treasury, Janet Yellen, she had a speech today. You can also go through, read her speech from earlier today. And then we had crude oil inventories. We're still, piling in the oil, which is good. Eventually, we will start to see that taper off because we're getting ready to go deeper into the summer. We got the 4th of July coming up. People are just going to be doing more traveling. Airlines have specials and deals going on now. So a lot of people are just trying to get in the air and go somewhere different, get a change of scenery. So we'll definitely be paying attention to that. Another number I really didn't focus on it earlier because today was Fed Day. We really wanted to hear what the Fed was going to say. But we did have building permits and housing starts numbers that came out today. They were off. We've already talked about the housing market. We've talked about building permits. We've talked about the cost of materials for homes, what the supply is like in the housing market right now, the demand. So this right here should not be a surprise, but building permits is somewhat of a surprise that it was off. So it's just, going through to understand why building permits were off. Was it that the money wasn't there? Was it that the approvals just didn't go through? So like, building permits, that's a lot of money. It's a lot of building permits themselves. So yeah, that's a report that definitely warrants following up along with housing starts. But to continue on with the news that we had today, because today was a pretty red day when it comes to the news. We do have a speech coming up. Actually, it's going on now from the Royal Bank of Australia governor. We have their unemployment news coming out in about an hour and 5 minutes. So that will be very important to look at if you trade any Australian pairs. And then the New Zealand dollar, just going back up before I move to Thursday, they had their GDP news come out today and it was amazing. They grew their economy by 1.1%, which is great news for any economy to know that you grew your economy by that much. So one thing I want to tell you guys about all this news before I move on to Thursday to kind of sum it up, tell you guys what to look for in the short term, midterm, long term. So I already told you guys that a lot of the treasuries started going up today. A lot of the rates for things that back the dollar or help the dollar kind of have an anchor in the financial market, those rates started going up today, anywhere from 1 to 1.5%. So there again, any loans, any mortgages, any types of things like that that are taken out from now on, they're going to be a tick higher because the Fed has already signaled that it's going to start raising rates, even though they haven't already. That's like a green light for financial institutions to say, yes, let's go. Not all financial institutions or lenders will do that, but they have that free will now to do so. Also, whenever you start seeing treasuries and yields and stuff start to move up, there was also a swing in the dollar today. So the dollar at one point in time was like 91.23 or something like that. We all rejoice whenever the dollar goes up because we think, yay, strong dollar, strong economy. That's great. That's great for us, but it actually sucks for the global economy. And then remember, that's going to domino and smack us back in the face. So while the dollar going up is a good thing over time, a sharp increase in the dollar's value is not good. It's not good at all, because think about what that does for the global economy. You have currencies out there that are pegged to the dollar. You also have commodities that are pegged to the dollar. You have other economies that are holding on to our dollar as collateral for something that was as an exchange mechanism. So they're essentially losing value on a transaction. So they're losing money. Countries that have to buy commodities lose money because they're having to buy it at a higher price. Any country that we do transactions with who are supposed to be our friends are really paying more because that transaction is done mostly in the US dollar. So anytime we start to see the dollar tick up, just like start to think about those weaker economies out there. Who's going to suffer the most from a strong dollar? Who right now fits that bill? Europe. Anytime we talk about countries affected by a strong dollar, I mean like mainstream major currency countries. So even though countries like Brazil, Venezuela, Colombia, African countries, smaller Asian countries, they are going to be affected. They're not going to be affected as much because they typically have another currency that they are using or that's pegged to their currency. So they have a bit more of an anchor, more of a cushion against our strong dollar. So countries like Canada, the UK, the whole of the European Union, those like group of European countries, Japan, Australia, New Zealand, those are the countries I mean, like when we start wanting to talk about who's weaker amongst those, because when we're comparing rates, we're typically comparing our rates to those countries, not Mexico or Brazil. So in the long term, how was the news today going to affect us? Well, obviously, we're talking about 2023 now. We've completely skipped over the fact that 2022 has to come first. The Fed typically thinks like that. You have to think long and far in advance. It's just like a company. It's really how we all should be thinking about ourselves, our finances, and our lives, short, mid, and long term. So 2022 is essentially going to be the plateau year, the year of stabilization, essentially, before rate changes. And we might actually get a rate change next summer. We might get one next fall. The only reason why I say that is because I look at what inflation is like currently. I look at what prices are like currently, and we're not even in the middle of the summer yet. Commodities prices with the dollar at the value that it is right now, or at the value that it was when I last looked at it, can't really sustain themselves. So we have to find a good balance. So what's going to have to happen is if our dollar continues to remain at a higher level, meaning like a 1% change in the dollar's value is significant for the global market. So anytime you look at the dollar's value, when you start seeing it go up like over 0.5% and definitely over 1%, just know that, okay, like something's got to give. Like that's like pulling a rubber band, not to its max, but that's like stretching a rubber band pretty far. So I'll definitely want you guys to pay attention to that. Pay attention to, let's see. I think the commodities and the pricing for this summer are going to be the big thing for this year. Those are going to be the big things because with the dollar at its value right now, we have to make sure those countries that I was just talking about can pay for those things. Midterm being, let's say, December to maybe June, July of next year. Still looking at commodities prices, but also we want to start focusing on jobs and wages. At that point in time, in order to get the economy to stabilize, people have to go back to work. We have to stop giving out stimulus, individual stimulus payments. And we have to also make sure that companies are able to pay, and companies do pay their workers higher wages. Then going into the summer of next year, possibly getting a rate hike then, solely because of everything I just explained. The inflation, the cost of what things are right now, and then just making sure that people are really able to get back to work and get paid. Once people are getting back to work and getting paid and they're starting to spend more money in the economy has to catch up to where we are at that point in time, where the dollar is, where the global economy is, like all that stuff has to catch up. And if it hasn't by that point in time, then we could possibly get that rate hike next summer, then also get one next fall, because typically when the Fed does one rate hike, they'll see how it goes for like a quarter, and then we'll probably get the second one around September, the last week in September. when they have the Fed meeting, because that will be a quarterly Fed meeting. And then going into 2023, seeing how those prices stabilize, and then, checking on rates then. But the global economy has to rebound. Like, we have to make sure that the other economies can catch up to our strong dollar at this point in time. If the other economies can't catch up to our strong dollar, then that's going to boomerang back and hit us. And then our dollar is going to suffer because we're not able to do global transactions effectively. That's that. Tomorrow, we have a meeting with the Swiss franc, this Swiss National Bank, which is the Swiss bank. So everybody knows, like, whenever we start talking about the Swiss bank, we're talking about millionaires, billionaires, safe haven currency. So we definitely want to pay attention to what they're saying. And at this point in time, now that the European Union has agreed to lift travel restrictions on US citizens, this is the overall European Union. Individual countries can still set their own rules on what quarantine might be or what vaccination rules might be, but the overall European Union has lifted travel restrictions. So I expect to hear some of that in the press conference in the morning. I also anticipate hearing how they plan to deal with the influx of money and people coming back into Switzerland, coming back into Europe as a whole. And then just wanting to hear how they feel about their rate. At this point in time, because we have heard what our Fed has said, remember what I said Monday, anytime our Fed makes a decision and says something, other banks tend to follow. The Swiss bank tends to be an exception because they are a safe haven. People tend to put their money there as a store of value, and they're highly regarded. So I just want to hear what they're going to say about their rate solely for what I just said. When you have people pouring money into your economy, the elite pouring money into your economy, you have to make sure that money can maintain its value. So I don't think they're going to go up. I don't think they're going to necessarily change their rate this time, but I do want to hear what they plan to do in the future. And for them to really maintain their status at this point in time, their rates will still have to remain negative. Let's just see how long they say that they're going to want to keep them negative. We also have Eurogroup meetings tomorrow. That's just going to be important. It's not orange or red, but it's going to be important because we're going to be getting Euro updates. We want to know what's going on in Europe, what they plan to do with travel, what they plan to do with jobs, wages, the same things that we talk about here in the United States. We definitely want to hear what Europe is doing because they have the largest monetary system on the planet, so we care. Philly Fed manufacturing news comes out tomorrow, and then unemployment claims. That's important. Just talked about it, but we talk about it every week. And then at the end of the week, we have a Bank of Japan bank conference, but then before that, we have a monetary policy statement. I don't think both of those are going to be split. Just know when it says tentative, we don't know when they're going to have their meeting until an hour before they decide to have it. So that monetary policy could well be like at midnight, and then this press conference is like 1 or 2 o'clock in the morning. So just if you care about Japanese news and what they have going on, you just have to pay attention to their news and just be aware of what's going on. And then also for the GBP, they have retail sales. Important because we haven't talked about Brexit in a really, really long time. But one thing I can say is that it's still like the after effects of Brexit are still there. We still have to make sure that, all the little bits and pieces are picked up and put in their places. So that's that. I'm gonna go ahead and stop sharing my screen for a second. Okay. All right, so does anybody have any questions about that information? If you do, you can put it in the chat, or you can save it for the end. Those links for the Fed, I'm going to put those in this chat on the Zoom call, and then I'll transfer them over to the Telegram group as well, so that you can have all of the links and you'll be able to go back, watch the videos if you want to, but definitely read those notes. Know that the Fed is definitely working on changing up our monetary policy. Couple side notes that I stopped sharing my screen. I didn't have anything on my screen to share anymore. But the Fed has officially made Juneteenth a federal holiday. A few states celebrated it as a holiday and actually made it a paid day off for their state employees or for employees in their state. But now it's a federal holiday. So this Juneteenth is going to be the first time Juneteenth is a federal holiday. It's the first time they've created a federal holiday since 1983. And that was when they made MLK Day a federal holiday. So just know that this upcoming Sunday will be, just know that will be a federal holiday now. So, when we start talking about progress being made, when we start talking about the administration's listening to the people, bills getting passed and things in Congress kind of actually not just being started, but they're being finished on the other side as well. Juneteenth is something that has been talked about in Congress for a really long time. And the talks of it being made a federal holiday have always been there, but it's done. You can go to congress.gov and you can read about it. You can read who voted for it. You can read who voted against it. You can read why, because they all stood at the podium, gave their reasons why. I think there might be a video from the vote on C-SPAN. You can actually go back and watch it for yourself if you want to do that. But it's all there. One thing this fundamental session should do for you guys is let you know that the information is always there. There should be no reason for anyone to feel like they, quote unquote, they have the information and we don't have access to it. We have access to all the information. We just have to know where to look for it. And it just takes you reading and asking the questions when you don't understand, because, even in these calls, like we have the group set up for you guys, we have the Zoom calls set up for you guys. And we all have gone through at some point in time in our lives, a phase where we had to be a student and learn and ask the questions that may have made you feel silly, but just know that like 4 or 5 other people, maybe the rest of the class, may have wanted to ask that question, but they were afraid. So I always appreciate the questions. I always appreciate, you guys stepping up and just asking the questions, because that's the only way you're going to learn. And, if you DM me and ask me a question, sometimes I feel compelled to have to go back and explain it or bring it up in a Zoom call at random or whatever, because that might have been a question that somebody else in the class could have had, or information that the rest of the class could benefit from. So, take advantage of us while you have us on these calls. Definitely ask the questions, because this is going to be that time now where we're transitioning to a digital marketplace, digital currencies. We're transitioning. Our financial and monetary system has been transitioning since 1970. When they first made credit cards and made credit available to people, they were transitioning then. It was just a slow transition because people don't like change. So anyway, speaking of, while you have us on the call, this is going to be my last call for like a week or so. So if you guys have any questions about the week, any questions about news, send those to me, put them in the chat. Actually just put them in the group chat so everybody can see them. I will answer all of those by like tomorrow night, definitely by Friday afternoon. And then next week, Mr. Levels is gonna hold y'all down. I might be on the call, but I'm definitely not gonna make any promises because I'm traveling and I'm Just at this
She's
point,
leaving on that midnight train, Georgia.
uh, I'm not too certain about what my connection is gonna be like while I'm gone. So yeah, send me the stuff, send me questions and stuff while y'all can. Hold up. Since I said that, I'm gonna do something really quick. Sorry. I'm gonna go back to the Forex Factory calendar and I'm gonna go to next week really quick. I'm just gonna scroll through and just see if there's anything that's like super, super important that I want you guys to pay attention to. Definitely pay attention to Wednesday. Wednesday, there is a ton of manufacturing and flash news coming out. And then OPEC. OPEC is next Thursday. Next Thursday is also my birthday. Okay, that's not important. Let's see. And then consumer sentiment is coming out on Friday. So next Wednesday, Thursday, Friday, definitely pay attention to the markets. On Tuesday, this news, existing home sales, that is definitely going to be important for our talks of inflation, home sales, those types of things. That's going to be important for you to pay attention to. European consumer confidence is going to be important for us to look at because we want to know how confident those consumers are going to be with the market reopening and just how confident are they in the tools that they have currently going forward. So next Wednesday, Thursday, Friday, pay attention to the market. You shouldn't be in the market after next Wednesday anyway. Those should just be days where you're like, definitely Thursday and Friday, where you're just watching the news. Definitely pay attention to the GBP news. GBP is a pair with trade, but asset purchases and the rates. That's going to be heavy, heavy GBP news coming out on Thursday. So Wednesday, Thursday, Friday. Remember, next Wednesday, Thursday, Friday, news is coming out. So okay, that's that. And all right, I'm gonna go ahead and turn it over to Mr. Level so he can get started with the technicals.
Cool beans. Appreciate you, Carmen. As always, great information. Thank you, thank you, thank you. Thank you for everything you do, and we're gonna miss you while you gone. But you know your boy gonna hold it down. So let's jump into these midweek technicals.
You better.
Let's get into it. So looking at the dollar, what do we have? If I look to my left, I see our target that we was targeting, this pool of liquidity. We wanted to see the dollar hold above this structure, plain and simple. Didn't come down quite as far as I had it marked, but we know that this is just a marking. Nothing is cookie cutter perfect. We see the pullback here, push up, the pullback here. We see this pullback here, hold this structure. Good sign. And then today we just see that pop up. And we see liquidity captured. And that's that. So with that being said, let's look at our currency pairs. Y'all just want me to run through this. GBP USD, NZD USD, silver, gold, US 30. Thank you for coming out. God bless you. Good night. Hey, yeah, man. At this time, I'm gonna start the recording and take any questions.